5 CEOs on one stage. Well, we've seen this before because we did this at OnRamp. We did a very similar thing here. And we're here to talk about experiences, talk about learnings, all things that go into running a successful MGA, going from zero to success, and all of those things. I'd love to introduce folks, but you can really say it better. So Tyree, I'd like to start with you. Tell us about Players Health. What is your mission?
Sure. So my name is Tyree Burks, founder and CEO of Players Health. Our mission is quite simple. I don't know if it's an easy one. Our focus is to create the safest and most accessible environment possible for an athlete to play the sport that they love. We are a brokerage, MGA, specifically focusing on sports, K through 12, and fitness organizations. We have a risk management approach around how we create safer environments. So really happy to be here. Been around for about 7 years now, and yeah, excited to be here again. Thanks.
Fantastic. And Adarsh, tell us about CoverTree.
Let's do it. Thank you, everyone. I'm Adarsh, co-founder and CEO of CoverTree. We're focused on bringing Insurtech to Middle America. We're an MGA, and our first product line is manufactured homes. Before CoverTree, if you wanted to buy manufactured home insurance, you had to call an independent agent or go through a wholesaler. It was a very clunky process. And while the insurance wasn't being addressed, the market was growing. Today, there's 22 million Americans that live in manufactured homes, and everyone now believes that it's the future of the way we'll construct homes. It's the future of the way we'll live. And so we're starting with that and expanding towards all sorts of specialty for Middle America. And we're based in Detroit.
Hey everybody, I'm Gage Caligaris, founder and CEO of Ledgebrook. At Ledgebrook, our mission is to modernize specialty insurance, the E&S segment. So we're a tech-enabled E&S MGA, going to market this fall with our first product, which will be GL and supported excess. What we're doing at Ledgebrook, basically, we're bringing the best of modern technology with the best of underwriting expertise to create an amazing experience for our wholesale brokers. That's the plan.
And Rick, what is Hippo?
A company that is focusing on protecting the joy of home ownership, and we think insurance, although an important backstop, is just the backstop of that. We really want to focus our efforts on how do we help a customer proactively prevent claims from ever happening, and that's what we've been spending the last 5 to 6 years doing.
All right, fantastic. So lots to talk about getting products live. We're definitely going to talk about that. But let's go back a little bit further, kind of as the company gets started. As I look here, I've got 2 people came from insurance, one that came from technology like myself, and one that came from the Canadian Football League. We'll come back to that one because that's going to be, that's the... So I guess I'll start with, Adarsh, I'm kind of curious, how did you choose insurance? And what were the things that kind of surprised you as you got into it? And then I'm going to reverse it and ask, like, for the insurance folks, how is it getting into tech? And what were the learnings that you had to go through?
Yeah, thank you. That's a good question. Before insurance, I was a product manager at LinkedIn, which is about as consumer as it gets. I owned LinkedIn Premium, InMails, a lot of the things that you might use on a day-to-day basis. So insurance is a completely different angle, but I was born and raised in Michigan, and I grew up seeing traditional industry. And so applying tech to traditional industry was something that I always wanted to do. Insurance is fascinating because it's 8% of the US GDP. Not a lot of young people are getting into it, and it's actually not that hard to learn. One thing I found.
Okay, we're gonna have a nice panel here.
Shots fired.
Whoa. I would say it's one of the most
I need to sit between you.
I'm an insurance guy now.
Okay,
You
think you're an insurance
You're lucky
guy
you've got Tyree sitting next to you, I'm just saying.
There's a lot of these acronyms and things coming into it, and it was so daunting. And every day we would chip into it, sit in brokerages, learn as much as we could, and we realized how much we could actually innovate. And when it came to actually getting started, we knew that we wanted to focus on things that were proprietary to us and not focus on anything else. So our data, right? The way that we rate, the way that we underwrite, the way we deliver a customer experience, the way we distribute, our distribution partners. And we didn't want to focus on things like implementation, like the IT aspect of it, which is why we partner with Socotra early on. And, following that, we're, obviously scaled the business and launched in a bunch of states.
Great. So yeah, Gage and Rick, are you going to stand for that? How is it coming up? How is it coming from the insurance background and getting into tech?
Yeah, I can give some examples. So at Liberty Mutual, my background is actually as an actuary, and I spent the better part of a decade there. And I like to move fast, and I like to improve things and build things. And there were so many technological roadblocks in my way. I used to run the GL pricing team, for example, and I saw how many screens the underwriters had to work with every day. And then I saw on the back end, as I'm trying to improve the model, 6 months to pull our own data and to on-level it and combine it. And then when I asked the IT people how long it would take to implement, they told me 8 years. They told me 8 years to put a new Excel file behind the scenes. And that was the technology we had. And so I thought, hey, look, I tried to improve things from the inside, but it probably just makes more sense to start from scratch and go at the speed I know I can go at. And that was kind of how I came to the tech side of things.
Yeah, no, so a couple things. One, not only have I spent my entire career in the insurance industry, which is about 30 years, I actually grew up in an insurance agency family. So I was committed from birth to be in this industry. I'll also say something that's interesting. My colleague and former CEO of Hippo, Asaf Wan, has said many times, if he had any idea how complex insurance was, he never would have started Hippo. And I look at him and I said, well, I could have told you that. But he didn't want to listen because the speed in which the industry moves generally is very, very slow. And I do think bridging that gap of insurance and technology creates a really interesting opportunity, because you do have to have the insurance pedigree to be successful in this space, because at the end of the day, there's risk and you need to know how to manage the risk. But you also need the technology that makes sure that you're putting customer first, to really understand how quickly you can take things to market, how quickly you can add new product lines. So honestly, I think tech people that don't think about insurance as something that's meaningful will fail. And I think insurance people that think they can just go slap on a website and do something different will fail. You really need the blend between the two.
All right. And then Tyree, you had to learn both.
Yeah.
How was that?
I think the evolution for me in insurance, we started as a risk management company. And so when I talk a bit about our mission around how do we create safer environments for athletes, that was the initial focus for our company. We created an injury management platform for athletes for organizations to follow specific protocols around how they would manage an injury. And then, of course, we got into more things. We realized that injuries weren't the only thing that organizations need to focus on. It was around abuse prevention. It was around compliance. All of those things contributed to creating a safer environment for athletes. I think 3.5 years into the business, we realized that sports organizations don't spend money on insurance, on risk management, and they have to buy insurance. And so about 3.5 years in, we pivoted to setting up a brokerage. We started to look at the data that we have on how injuries are being managed, how we're managing abuse, how we're managing compliance. All of these things are now indicators for us to better understand what's good risk, what's bad risk. We now have more insights than most carriers do at that time. We have over 100,000 injury reports that we've accumulated over the course of the past few years. On youth athletes, no one has that data. We have all of this information that helps us understand what leads to a claim. And of course, that proprietary information allowed us and gave us the insight to set up an MGA, to actually start to underwrite, price, and then we're using that information to better segment. But it all starts with risk management first. If we can't create a safer environment, we can't predict claims, we can't make money. So I feel really passionate knowing that we have a company that the more on mission we are, the more money we make.
I think you're the only one here who didn't initially set out to do insurance.
Yeah.
You set out to help kids do sports safely. Where along the line did you decide that insurance is going to be a big part of this?
Well, it was definitely about 3.5 years in. I think I started the business and I realized that we sell to youth amateur sports organizations. So I realized I had never sat on a board. I didn't know what our customers wanted. So I sat on a youth association board. I realized what these organizations deal with on a day-to-day basis. And during the time in which I was on the board, our insurance premiums doubled. And we implemented all of the risk management policies and protocols we had. My question was, why are we paying more if we're creating a safer environment? And of course, that's when I learned about, the macro of incidents are happening in sports, and of course, rates are going up because we can't manage the risk properly. So abuse and concussions are the two big kind of claims that we deal with on a day-to-day basis. No one has a way to manage them collectively right now, and this is what we're paying for. So that's when the light bulb really hit off, because we lived in that space. We helped organizations manage that, so it allowed us to be more kind of mission-led to focus on solving it, but also capacity was a really big problem in our space. You know, we went from 25, 27 carriers down to a handful, all because the carriers are saying, we can't write this profitably. We don't know when the next USA Gymnastics is coming. And because of Players Health, we see everything pre-claim. We now have an indicator that allows us to get ahead of the claim and now help these organizations manage the risk. So that was kind of the light bulb. Of course, I didn't know anything about insurance, and it took me time, a ton of mentors helping me figure this out. But the idea was, let's help them prevent these incidents from happening, similar to what Hippo is doing on a day-to-day basis with homeowners. And if we can do that, then ultimately we can write this profitably and we can bring more capacity into the space.
Awesome. And then as you get towards getting live, and I'll toss this out there for people to answer as they wish, obviously you have to build out the tech. That's where we help. You have to get the product lined up. How do you orchestrate those two things? How do you get them together? You've got people from different cultures of the insurance side versus the tech side, and they've got to come together and agree. They have to make concessions where one person thinks it's got to be this way, but maybe the other side says it's not so easy. How did you orchestrate?
Well, maybe I'll go ahead and start it. This is actually an area where I think tech organizations do a way better job than insurance organizations. An insurance organization, once they realize they need some tech assistance, whatever it may be, they always solve for themselves first. They always look at, how do we make what the underwriter's doing or the claims adjuster doing, what do we do to make sure that we solve our own operational efficiencies first? A tech organization does the exact opposite. They say, what does the customer need? What does the customer want? As long as on the pond, sort of the duck on a pond analogy, as long as it's moving smoothly to the customer, we can be paddling our little feet behind the scenes while we take care of customer first. And that was a decision that we made. First, let's make sure we understand what Tyree does. And by the way, I'm a huge fan of his organization. But first, what is needed from the customer? What can we do to actually solve the fundamental challenge, which is reducing risk? And then let's build the technology to support us. Or let's partner with a company like Socotra to help us build the technology. But first, customer.
Has he answered it? Any thought? How does it work for you guys?
Yeah, the orchestration between tech and product. So we're very fortunate on our team, and it kind of goes to my earlier point, learning about insurance. We're able to get some really amazing industry veterans on the team. And when they came on the team, we flipped the narrative. They were used to, for 15 years, alongside teaching Div and our founding team all about insurance and being kind of the Yodas, they were used to being told no at big insurance companies. And we had the exact opposite. We said, our tech team would say, what do you want? We'll build it. And a light bulb went off with all of our team members that came from traditional industry, and we were able to execute very quickly. It was like a different way to think. And also having a blank slate helps too.
See some nodding, similar?
Yeah, I mean, we definitely have a blank slate, so I can relate to that. I mean, we're so much smaller than a lot of these companies that honestly we haven't run into a ton of problems with coordinating between our functions yet, but happy to learn from other folks as we scale.
Well, I think one of the biggest fundamental issues that I think we've dealt with as we continue to grow our business is that when you think about the service side, we're really service heavy. So injury prevention, abuse prevention, all of the things we do, that's a completely separate, we'll call it day-to-day experience than buying insurance. And you have to solve for both. I think what we realize is the buying insurance part, with Socotra, with the right individuals, we brought in our CIO, Sandeep, people that just knew how to get the systems up so that we can deliver the policies, so that we can help them file claims. The hard part is, how do we get them to change behavior? Extremely hard. How do we get organizations that have operated this way for years to now do things differently so that they can help themselves? That's probably, we haven't figured it out. We're still working through it. But I think delivering the technology to actually procure insurance and then also support from a claims perspective hasn't been the biggest issue for us. It's been the other way around.
Interesting. Thoughts on that? All right, so as you're going live, there's some hard decisions that need to be made about what goes into that first version. As they say in software, Darsh would know this well, that if you're not ashamed of your first version, you shipped too late, or not embarrassed by, I think, as they like to say. That thinking is fine for a social network or photo sharing app. Insurance can be a little dicier, to put it lightly. But you still have to channel that kind of agility. And that kind of, you also have to realize how much you don't know until you're live. And that's certainly been true for us. Till we had customers, it's all a guess. How did you decide what actually had to be in that MVP? What was it like in those tough conversations?
Yeah, I can start on this one. For us in the manufactured home industry, there's 4 or 5 competitors, and so it was pretty straightforward in terms of what we could build. We did a comparative analysis across all of our competitors, figured out what we liked, what we didn't like, and then with Socotra, we figured out which data integrations we could do in a short amount of time, and then we shipped out our state filings, and that's it. So when it comes to rating and underwriting, that stuff is set in stone, right? Unless we take rate or update rates. When it came to sales and service, people, and patience. We have a really great sales and service team, and everyone was hands on deck. So if something broke, even to this day, we still use people. We automate as much as we can, but the human touch, I think, at the beginning is just, it's critical. Yeah. The first customers, might be the most important.
Of course.
Yeah, I couldn't agree more. I think one of the things that we didn't prepare for was success. I think in the beginning, when you first get into anything, you hope for the best, and then you kind of prepare for the worst. But when the best happens and you haven't prepared for it, the back office side of insurance is extremely important. And when we first started to kind of issue policies, one of the things we weren't thinking about, and I think I said this on our last panel, is we went from, say, $1 million of premium in our first year to doing like $6 or $7 million the following year. And we had to issue 14,000 certificates of insurance. We didn't have a digital system to issue those. We had to do it manually. So I still get headaches thinking about it, but from August to like the end of September, we were issuing hundreds of COIs, all because we were successful. And of course, the back office side is something that you now start to prioritize because you realize how much of not only a cost, but it could be a huge distraction as you're trying to scale the business. So accounting for that, I think, is important.
But it sounds like you agree with the decision. Like you did not wait for that to be automated before going live. I mean, that was the thing to do.
And I think some things, especially in insurance, you tend to be very risk conservative. You have to weigh the options. And I think, there's certain things you can't manage all the risks, especially when you first go to market. You try to make sure that you're tucking and dotting and crossing all the T's. You get to market, get a product, and you're going to learn. And I think that's the technology side of the business that the industry kind of has to always be okay with, is that you're not going to have everything figured out. Some things are going to happen that you can't predict, and you just have to be willing to move quickly and be okay with that risk. Trying to manage everything, it'll take you years to get to market, and then you've ran out of money, and then, of course, you're downhill from there. You got to get to market, and you got to learn.
Yeah, this reminded me of decisions we made 5 and 6 years ago. Insurance is different than every other product that you'll sell. Every other product you sell, you go into market, and if you get some traction, then you go, ooh, let's do more of that. Let's just keep doing it. Let's double down. In insurance, you actually have to pause and go, why did they buy my product versus State Farm's product? and you scratch your head. But then you've got this competing, because you've raised money from a VC likely, We've got this competing thing that's growth, 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 growth. So you're constantly having to battle, is the growth for growth's sake, or is the growth because we've created something that's differentiated in the marketplace? And that's one of the challenges of every Insurtech company that I've chatted with over the last 6 years, is for it to be sustainable long term. Nothing is worse than growing like crazy and then fizzling off and blowing up. So it's really trying to find that balance between, why is somebody buying my product? Are there holes in my underwriting? Have I priced this wrong? Am I oversaturated in Dallas? Something that we experienced a lot of. Making sure that you're constantly balancing the underwriting profitability, whether you're the risk bearer or not. Like, I've heard people go, that's all right, we 100% reinsure it. Yeah, well, if the reinsurer isn't making money, in a year or two, you're not going to have any reinsurance, and then you don't have a company. And try raising money right now. I'm sure some of you are doing that. It's difficult. So the fundamentals of underwriting profitability have to be met eventually. So you're constantly weighing that battle, and it's hard as a startup because everybody's telling you just to grow.
I couldn't agree with you more. I think we're dealing with that right now in the sense that there's always this competing factor. You're right. As soon as you take money, you're on a hamster wheel. You got to grow. And you're seeing success in one of the things that you'll always have in insurance is, say I want to manipulate the market and it's a race to the bottom. You're going to be fighting in the street for that business every year if it's not real value being added. And I think that's what I'm talking with our sales team around it, which is like, we have to hone the value proposition. If I just want to be a broker and I'm going to get them the cheapest price, get their coverage, next year they're going to be back shopping it. What value are we going to bring that is actually going to make our relationship sustainable? And a lot of kind of early stage startups, you struggle with that because you are so focused on growing month over month.
Also, I imagine the easier it is to bring someone over, the more portable it is. The easier it is for them to move.
Absolutely.
Because it's appealing early on. Wow, people shift all the time with that insurance product. Let's get in there. And then you've got a bunch of them, and it turns out they leave you too.
Yeah, for me, I think you have to look at what's your value prop, and those have to be your rocks, right? So for us, it's fastest quote to market for our wholesale brokers. So anything that's going to threaten that, we can't compromise on. It's also, how do we structure our data, and how do we make sure this scales, right? I'm an actuary, I love data structures. And so that's why we're working with someone like Socotra, right? Are there easier ways to get to market? Maybe. Is there a better way to do so that scales for the long run? I don't think so. That's why I bought the product. So.
Oh, thank you.
So there's places to compromise. The back office, we can type everything in manually, but it has to be architectured correctly behind the scenes, and we'll get there over time.
So a lot of manual typing in your case too when you get live.
That's right. We get a lot of big old PDFs from brokers that have to go into the system somehow. If we have to type them all in day one, okay. But as long as it's going into a system that's going to scale for us in the future, I'm all right with that.
Any other examples of things that people added after going live?
Yeah, I have a good one. In the manufactured home space, a lot of the homes are lended on. And so the insurance policy is tacked on to the home loan. And so we have this thing called mortgage billing. I'm sure a lot of you guys are familiar with it. And for our first couple policies, they were mortgage billed. So we had to go to USPS and send the letter. And then volume increased to the point where it was getting expensive. It was too many trips to USPS, and so then we built an automated mortgage billing system where, people come in, when they input their mortgage information, we automatically send the letter, automated the mailroom, automated lockbox, all that kind of stuff. But that's a fun example, of kind of the being hands-on from day one.
Yeah. So I understand we're here talking the tech side of the business, and in terms of what do you need to add as you grow, it's not always technology. You can partner with Socotra and being able to add the technology that you need to grow your business. You also have to add people that know what the hell they're doing. And that is a massively different challenge if you're trying to hire insurance people. as an example. The tech people get super excited and they're pumped and they want it. Now, granted, insurance is not overly sexy. So there of course is you want me to do what? LinkedIn? You want me to go work in insurance? You can overcome that. What you can't overcome is getting the insurance pedigree people that are super jazzed about your growth rate. In the last 18 months at Hippo, we've hired Chubb's chief actuary, USAA's chief risk officer, AIG's global chief underwriting officer, RenRe's CFO of North America, QBE's general counsel, Hitchcock's Homesite and American Family's chief claims officer. We can go on and on and on. When I interviewed these folks and I said, yeah, we're growing at 30, 40%, their response wasn't, really? It was, really? So there's also that piece of it that you have to balance. I don't want to see any Insurtech companies fail, because every Insurtech company that fails, we all get bucketed into that category. And we have to support each other. We have to continue to grow. And the way that you do that is you show some discipline. And it's really important to remember it, because valuations are only meaningful at exit. They don't mean anything until you actually have an exit or something that you can monetize. And that's only created when you build something that stands the test of time.
Then how do you think, now, post-live, how do you think about adapting the product, the technology, the product, to what you're observing in the market? Getting those iterative cycles. How do you build a culture of that, and how do you think about it?
I think from our perspective, I think when we first went live from a digital perspective, where, of course, you start to actually see volume come through the platform. You actually start to see kind of what products are missing. So new products is definitely where we've been focused. So we realized that there are certain products like property that we didn't have. We need to be, in order for us to be really competitive and compete with the big players, we need to have that product. And so as you start to get more volume, more brokers are starting to place more business with you, they're asking for what is needed. And we're also realizing that, you know, the quote to bind ratio is not high because we're missing out on certain things. So our focus has been new products, and then also broadening out kind of capacity to support us with larger deals. Because when we first went live, we didn't have any technology. We were all manual. And so we made a conscious trade-off of not focusing on smaller organizations. We went after what we call whales. So if organizations doing, say, 25, 50K a premium or more, that's where we focused, because we had the ability to place it. It was about getting to market quicker. The technology allowed us to increase our volume, which allowed us to kind of learn more. We had more data to better understand kind of what we would do next. New products were really focused so that we can have a broader set of customers that we can support.
Cool. Yeah, I can hit on that. The biggest thing from day one was making sure that our data architecture was good. Because in the beginning, it's difficult to manually go through and check policies and see what's going on. So we had dashboards from day one, which I think was really helpful in iterating. But the second most, I would say this is even more powerful, was conversations with customers. After every single person bought a policy, we had a conversation and learned about their situation, who they are, why they bought a policy. And that ended up kind of guiding how we sell policies moving forward. We also have great tools like Full Story, where we actually watch. You know, anytime a direct-to-consumer policy comes through our whole team, it's exciting for us. We all get online and we watch it go through, and I think that's just part of the culture. You know, it's exciting to see people go through and buy insurance autonomously.
Yeah, I'd answer that in a slightly different way. So for us, we're wholesale broker distributed, right? So we have more business than we're ever going to need, and they're going to tell us exactly what they want all the time. But it's more to what Rick said earlier, right? Like, so we can have as much growth as we want, but we have to do it smart. We have to stay disciplined. We have to block and tackle. There are no shortcuts in life, but there definitely aren't any in insurance. So we're going to be told all the time that we want to place more of this, you know, Harry, not admitted business with you, and then it's on us to kind of be selective in how we do that.
Yeah, I also think this is one of the areas where I think a tech focus is actually better than an insurance focus. So you have to build things that the customers want. That's the first important thing. And we've actually released 64 rate changes this year. 64. our total actuarial organization, and I don't mean they're all actuaries, the entire actuarial organization has 10 people at Hippo doing 64 rate changes. The insurance people among us go, that's impossible. How do you do that? Because you have a tech stack that can support making those changes very, very quickly. This is the kind of thing that's an iterative approach too. I can't tell you how many of investors in Hippo ask the questions, all right, do you think your rates are where they need to be? My response is never. They're never gonna be where they need to be. It's iterative, it changes, it evolves. Weather's changing. So you've gotta have something that is nimble and can constantly be, lack of a better term, upgrading your view, because you're gonna have more data tomorrow than you have today. You're gonna find new data sources. So it's really that balance of, can we move very, very quickly to stay ahead of the market, because incumbents tend to move very, very slowly. So it's really that interesting balance that, look, I mentioned earlier, I've been doing this for a long, long time. I think Insurtech done properly solves the balance. You have the tech mindset with insurance pedigree, building something that customer wants. And as long as we focus on that triangle, I think we'll be successful.
Hey, Rick, quick question. With 64 rate changes throughout a year, what information are you using to make those changes that frequently?
Yeah, Tyree, that's a really good question. It's a combination of, a lot of people ask us all the time, what proprietary data do you have that's so interesting? And we have some. We have Hippo's Total Home Protection, so we get a lot of interesting information in home health checkups and visits and that. But we also have access to third-party data sources. So the second you put an address, we hit 15 different data sources. Socotra understands how difficult it is to ping 15 different data sources via API, real time, run them through your rating algorithm. And oh, by the way, we have 3 different insurance organizations, 3 different companies we use. 1 that we own and 2 fronting carriers, just like many of you use. So then we have to do all of that. And what's an acceptable response time in LinkedIn? It's not a minute. It's, I don't know, half a second. So the tech to support that is massive. So you've got to use your own proprietary data that's unique. You have to use outside third-party data. And then you also have to use your own experience as time goes on. So Hippo, over the years, people have said, if you've got such a better program, then why is your loss ratio worse than the industry? And the answer is, when Michael Jordan was 5, he showed promise, he was still 5. It takes time to develop and grow and build. I know, with Mr. Wide Receiver over here. But for the record, I was a left tackle. You can't tell the difference between Tyree and I. But you really have to grow and develop and iterate over time. There is a new business penalty. It's real. My cohorts are way younger than cohorts of name large insurance company. It takes time to get it right, and the more claims you have, don't get me wrong, I don't want to have any claims, but the more claims you have, the more policies you have, the more you learn and you triangulate all of those into better intelligence. And then you move quickly because you've got a tech stack that allows you to do so.
Great. All right, let's talk a little bit about distribution. I mean, I know Hippo is largely direct. Ledgebrook, champions brokers.
Wholesale broker exclusively.
And how are you thinking about distribution, and what's the future of it? Well, what are you guys doing?
Yeah, ours, we have D2C technology, but we're not a D2C business. We're focused on major distribution partners. The manufactured home industry is largely concentrated between community owners, lenders, the realtors, the dealers. There's a lot of places you can get embedded, and so we partner with these major players, and this is our form of pre-underwriting. We operate in a space where our average home that we insure today, not including land, is worth around $94,000. We have some homes that are worth $180,000 and some homes that are worth $10,000. And so for us, the pre-underwriting is critical, like choosing really good partners for people then who can use our technology.
So how are you finding your customer? Is it you're working with brokers then?
Brokerage is coming soon. Right now, it's just through these affinity partnerships.
Oh, affinity partnerships.
Yep.
Okay, got it. You're kind of an affinity partnership with yourself.
Yeah.
That's what you do, because you already had a business.
That's one thing I love about kind of what we do, is that we can engage our customer in multiple different ways. So there's ultimately 3 ways in which we engage with sports organizations. We work with brokers. So there's tons of brokers that are engaging with our MGA. We have our own direct channel. we know our business, we know our sports organizations more, we're more mission-led. So we have our own brokerage engine, and then we also have it embedded. So if you register your kid for a sport on any platform, most likely we have a relationship or an integration with them. And so we want to work with organizations, work with the systems that organizations use to run their sports organization. We're directly embedded into those as well. So those are the main three ways in which we're engaging and growing the number of organizations we support. One last thing is we work with large national associations. So we may write USA Cheer. USA Cheer has thousands of small clubs within them. So we'll write USA Cheer, and then by writing USA Cheer, we'll ultimately get all of the clubs within them. That's another way in which which we grow as well.
So I actually have a shocker, Dan. I have a strong opinion about this one. Hippo is not direct to consumer. Hippo is omnichannel. We think it's very, very important to meet the customer wherever the customer wants to be met. We think that's critical. True story. When I started at the company, I asked Asaf, when are we going to distribute our policies through independent agents and brokers? And he said, absolutely not, never, won't happen, no way, no. And I said, you want to bet? And the answer was, you're missing an opportunity if you think direct-to-consumer is the only distribution channel. Like for homeowners, north of 90% still bought through some form of an agent and a broker. So what we did was we built technology that was direct-to-consumer-like technology to support the broker in placing that piece of business with Hippo. But we, about 25% of our new business is direct. About 25% of our new business is through agents and other insurance companies. And about 50% is embedded insurance. So finding partners that have customers that are involved in purchasing homeowners insurance for whatever reason, home builder, loan originator, loan servicer, title, escrow, wherever it may be, and actually putting a Hippo offer in the flow of the partner, in the partner's flow where the customer's coming through, because that's when they want to hear about insurance. And I think it's really, really important because direct-to-consumer works until CAC gets really, really high, and CAC generally doesn't scale very well. And let's face it, if Geico decided that it really wanted to get into the homeowners market, I'm fairly certain they could outspend us from a direct-to-consumer marketing campaign. So you really need to find ways to engage with customers the way they want to be engaged, and be open-minded, and that's what we were, and it paid off for us in the long run.
Well, they kind of like to see the ad with a hippo stepping on the gecko. That'd be kind of
Geico is an
Geico
exceptional
people
partner
here.
of ours. We would never do
That'd
that.
be kind of interesting.
Yeah, I mean, a lot of great points on the whole panel. I think direct-to-consumer gets talked about a lot, but when you think about a market like we're in, E&S is growing gangbusters, right? And the wholesale broker market is the biggest part of that. If there wasn't a lot of value being created here, why is it growing so much year over year? Why did it go from, a 30-something billion dollar industry to 80 plus, in the last 10, 15 years? It's because there is a real value for some of our brokers and independent agents and whatnot. So, you have to meet the customers where they are. And if people are finding more value from the wholesale channel over time, that's where the business will go.
I wanted to add to Rick's point. Yeah, it's great selling insurance to people who have to buy it, right? Yeah, so absolutely same philosophy for us.
Okay, so what do you think is the future? Where do you think the future is for brokers and distributors? What do you think the ratio is going to break down at? Rick has a ratio that for homeowners that is indicative of where the growth is. Where do you think the biggest growth is?
The biggest growth in...
Oh, what's the distribution channel? How's the ratio look today versus what it's going to look like in 10 years?
Oh, interesting. I mean, for us, that depends on the carriers, right? Stuff gets pushed to the wholesale brokers because admitted carriers won't write it through a retail agent, right? And they can't place the business through their normal retail agents. To the extent that underwriting guidelines are getting tightened, people are sending more and more products to these alternate markets, those channels will continue to grow. And then I think for other products, the more personal lines, as the customer decides that they're more comfortable with an online experience or a lower touch experience from an agent, over time things could move in that direction, but not everybody's going to be there right away.
I think it's a bit different for our industry in that what we call custom accounts or large organizations will always need a broker. Like the risk is so complex when we're dealing with just there's just so much that happens within a sports organization, and there's so much is at risk. So I think we'll always have some broker dealing with large national associations. I think on the smaller end in youth sports, like the average policy is like $1,000. That's where I feel like automation and technology is going to disrupt. We can't afford to write it manually. And so every policy we touch in terms of writing, we lose money. It's going to be completely automated. So I think for your large national associations, fitness clubs, things like that, there'll always be a need for risk advisory and support. The lower the dollar amount in terms of premium, the more automated it'll be in our space on the commercial side.
Yeah, I think Tyree's exactly right. It totally depends on the product line. I think the simplistic lines are going much more direct. Now, I've been listening about the demise of the independent agent system for like 20 years. As long as most of us are going to be around, it's going to be just fine. But what I do think is interesting is by product line, it's shifting, and it's shifting pretty aggressively. So take auto insurance as an example. How many auto manufacturers are spinning up MGAs or partnering with an exclusive MGA? Like, they're all doing it because isn't it a lot easier when you go out and buy the Tesla to go, my car payment is $700 a month, and that includes $1 million of liability insurance. And oh, by the way, if you have an accident and you have a dent, just bring it to us. Like, there's a lot of headwinds in certain product lines, and that's a form of direct. You're just directing as an embedded product with a partner. So I do think product line makes a huge difference in the rate in which this will shift.
Okay. So as we're starting to wrap it up here, I'm kind of curious, for each of you, heard a lot of insights here. What do you think is the best insight you heard from your fellow panelists? What's the one you're going to bring home? And double that as repeating of the highlighting, recapitulating the best learnings of the panel for everyone.
I think for me, Omnichannel, and really just double down on that. I think we've been wrestling with this in our company from a distribution perspective because there's so many ways we can engage with our customer. We shouldn't have an opinion yet. We should let the customer tell us and then make sure that we find the easiest way for them to engage.
Yep. It sounds like I'm copying you, but I was thinking omnichannel as well. Experimenting and testing what works best and not being scared if one channel dries up and the other one succeeds.
I'm going to triple down and also do a Rick thing.
Triple down.
But a slightly different one. I think to go back to the profit versus growth dynamic, right? So obviously Hippo's a lot farther along in their journey than we are, but we're going to face some of the same challenges, right? Where we have submissions where we could take a shortcut and opt for growth, right? And win business on price and things like that. And the importance of staying disciplined and not doing that. Something we talk a lot about at Ledgebrook, but to hear it from Rick and to know that's kind of definitely something that they've been thinking about on the Hippo leadership team, something I'm going to take home with me.
Yeah, and mine actually, and I know I teased you about it.
Yeah, you said all the wise stuff according to everyone else. So
yeah.
what?
I actually get really, really excited and motivated. Hippo's first chief product officer, who's now the president of our First Connect business, he was a product manager at LinkedIn. When I see really good, smart, young tech people going, insurance is something I think I can make a difference in, that actually pumps me up. Like, I get really, really excited about that because it's not about disruption, it's about modernization. And the only way you really modernize anything is to bring a fresh perspective and a fresh set of eyes on it. So I get really jazzed when we get people that come from awesome consumer companies like LinkedIn that go, I'm going to start a company and we're going to do something different. I think that helps all of us. It helps the industry.
I love that. If I could share just a little inside baseball, I avoid the word disruption. I've been talking says to anytime someone in the company, I see some copy and someone says we're going to disrupt, it's like, no, this is not disruption. When they came out with the COVID vaccine, to just say, get the vaccine, just going to disrupt COVID. No, you have a problem. This is a solution. It's the medicine. It's the it's not about disruption. This is an industry that thinks disruption it's not something they want. They want to be in business for another 100 years. They don't want to they don't want to disrupt anything. They're the Fortune 50. They want to stay there. And what they're after is they want that vitamin, they want that cure, they want that thing, they want the advanced technology. That's, what's disrupting is having bad technology. That's disrupting. When it works, it's the opposite of disruption. So, anyway, Sorry to steal the last word, but I was really inspired by what you said there. But I think it speaks to what...
It's your panel. You can steal every word if you want.
I think it speaks to so much of what we're doing. Everyone who's here today, everyone who's on the stage. So thank you everyone for being here. Thank you for being fantastic customers. It's been great working with all of you. And then Darsh, Thursday afternoon at 4 o'clock, we'll be in room C for product and innovation panel of some kind. The
Let's
room
do
C
it.
right next to this. So I'll see you at 4 o'clock on Thursday.
Thank you.
Thanks everyone.
Thanks for having us, Dan.
Thank you.